Hey everyone, thanks for joining us today. This is Ian, the host of Code and Capital, podcast brought to you by Benzinga. Today we're here with Sean Neville, the CEO and founder of Catena Labs and co-founder of Circle, the crypto company that went public recently and has been catching a lot of people's eyes in the public markets. Really excited to talk to Sean about USDC stablecoins and how stablecoins can not just change the way we move money right now, but also change other parts of finance and banking. Sean, great to have you today.
Yeah, thanks a lot for having me. It should be a fun chat.
Absolutely. So let's get started a little bit by talking about how you sort of got into crypto in the first place. And like what your motivation was around, getting into crypto early.
Yeah, so my background is in engineering. I was a software engineer, built everything from wrote languages, built server frameworks, built mobile apps, games, all kinds of things. But my orientation for crypto originally was really focused on data, and this idea that money is just data and it ought to flow globally like any other kind of data on the internet. And so it was this notion of, what if you did have a set of open protocols and open rails for value transfer, and what would that look like? And um, I think it looks global. Shouldn't pause at borders. It should be almost free, very very close to free for anyone to use. There's no business model around me sending my data to you in turn. Like I can send an email, it doesn't cost us anything anymore. And so similarly, imagining rails that will facilitate global money transfers at very, very low fees was just an interesting idea. And so got interested in, Bitcoin, co-founded Circle with my co-founder Jeremy in 2013. And the first use case that we were really excited about was all related to payments. Certainly imagined that there would be more sophisticated financial products that we could build once we had this new financial OS for the world, credit markets, credit lending markets, programmable escrow, programmable money flows. But the first case that we thought we would tackle would be related to payments. And what's interesting is it still hasn't really taken off even with stablecoins. It's imminent now, thanks to
Yeah.
regulatory clarity and infrastructure improvements. But yeah, that's where it all started. Founded Circle in 2013. And now flash forward, 12 years later, which is like 120 years in crypto, I think. But
I
yeah,
mean,
it's been
it's
quite a
yeah,
journey.
you mentioned that, Circle started out as, thinking a lot about the payment rails. I remember that you guys are focused a lot on peer-to-peer payments a little bit when you were getting started. And then around 2018, sort of dove into stablecoins and USDC. Can you tell us a little bit about that transition and what was the problem that you realized USDC could solve?
Yeah, I mean, for payments in particular, you need it seems really obvious now. Um, it wasn't necessarily as obvious in 2013, 2014, but for payments, you need a really stable mechanism to transfer value. And the aha is that a lot of people, while Bitcoin, Ethereum, other assets are interesting as assets, when it comes to payments, people mostly want dollars. And so even today we talk about stable coins, but what people really tend to want right now is stable coins that are dollars, not necessarily stable coins in other currencies yet, although we think that that'll come too. But the big uh, sort of obvious in retrospect understanding was, well, we want to use these rails. We want to use these, public internet rails for money, but the format of the money ought to be a new form of a dollar. And so how can we make that happen? And that's what led to, obviously the creation of USDC. It is true we had multiple products. We had consumer products. We had an OTC trading desk, and a part of that was because we have this huge thesis around all of finance transforming and changing. And so we built a lot of infrastructure. We built a lot of risk related infrastructure, sort of platform infrastructure that people didn't even necessarily see. It's kind of the iceberg below the surface when they saw the tip up top. And we were able to continue to iterate on that platform as we first created this USDC stablecoin, but then began to build other products on top of it, which is related to what we're still doing now at Catena.
Yeah, I mean, we had Joe from Hummingbird on in the last episode, and he's spoken at length about all the fraud and compliance and AML stuff that he had to do at Circle before he started Hummingbird. I'm sure that is still a big issue, uh, in the crypto space, and something that you guys are focusing on pretty closely.
Well, I mean, I think for any kind of money transfer, there's a lot of infrastructure behind the scenes that does various things, and the infrastructure that is responsible for effectively risk scoring and intended transaction is incredibly important. And for some of the risk scoring is effectively what are the kind of rules and the settings that that I'm thinking about executing here. Some are very highly related to existing laws in various jurisdictions of a payer and a payee, which obviously it gets more complicated as those are separate jurisdictions. And we always took the stance that, look, we were going to be a regulated financial institution. We were not going to simply be a tech provider. And so we pursued licensure really early, went in the front door, so to speak, with a lot of regulators. It spent a lot of time educating regulators, frankly, at the state and federal level. And it was all with this understanding that, yes, surely we will be held to those same regulatory standards that any other money transmitter, payment service provider, bank, so on and so forth will be held to, but also that there are new risk vectors that emerge. You mentioned crypto and stable coins. Certainly, there are risk vectors that need to be accounted for there. But as AI actors increasingly become economic participants, there are brand new risk vectors and security vectors to consider. So, yeah, we invested a great deal of just sort of mental bandwidth as well as actual resources to building that out. And you're never done. It's an ongoing investment.
Yeah, we're going to talk a little bit more about AI, agent identity and trust, which I'm really excited to get your thoughts on. But before we do that, why don't you tell us a little bit about Catena Labs and what you guys are focused on, and what you guys have been up to over the last couple months?
Yeah, so there's two forces that I would say we're right in the middle of. One is related to what you and I were just talking about, which is related to the dollar becoming internet native. And I don't know if we continue to use the word stable coin in the next 10 years, or maybe they're just called dollars or just called money, whatever
Yeah.
they are. But it is the case that there's a huge push toward, you know, making a dollar native on the internet. And some of the barriers to preventing that have been related to the lack of regulatory clarity, specifically in the United States, which is why we're so excited about the Genius Act and the unlocks that have happened there. So we're seeing, obviously the messaging from major incumbents who are really leaning into not crypto capital market use cases, which has been the dominant use case for stablecoins today, but payment use cases, including cross-border payments, bank-to-bank transfers, and other new kinds of products that the stablecoins stand to unlock. And so that's a very strong force. And then the second one is that just as the dollar is going internet native, the internet itself is going agent native. And increasingly, the web is entering this new era where a lot of the actors, we call them agents or call them, workflows or whatever words you want to use, but it is becoming the case that these semi-autonomous workflows are increasingly executing all the underlying mechanics on the web, including financial mechanics. So executing things like transactions, custodying funds, deciding how to distribute funds, paying out to human beings and businesses, as well as accepting payments and AI actors paying each other. So we're kind of sitting right in the middle of both of those things. And what that means is that we're focused on fleshing out the infrastructure that AI systems need in order to transact safely and securely, and then unlock these new kinds of financial capabilities. And we're certainly including stablecoins as part of the solution. It's not a silver bullet, stablecoins by themselves, but it is a very important piece of how these flows work. And we think of it as machine native money. Machines are transacting between machines or to businesses or humans, then it's very difficult to stovepipe those machines onto an existing, say, credit card system at the edges. And it is much more natural to some of these workflows to, cut out some of the middlemen and cut out some of the, participants in a 5 to 9 to 12 player system and simplify it. And turns out that stable coins do enable some of that. And AI actors don't struggle as much with managing things like signing cryptographic messages and handle the infrastructure quite reasonably in ways that have been difficult in some cases for, say, institutions to adopt. So we're building right in the middle of that. We're climbing the stack. What we've released to date is, I would say, is very low level. It's for developers who are working alongside us in the ecosystem. solving a couple of problems related to agent identity, which is just, how can you trust these things to do anything safely, and how do you apply policies to them, and that sort of thing. And then ultimately, we are also working on climbing that stack and building out what we believe is the first fully AI native financial institution or bank.
So let's dive a little bit deeper into the AI agent trust and identity aspect because I think it's so interesting. Like you can't do know your customer analysis or AML on an AI agent, right? So how does that change the way you sort of think about like and approach AI agents? And do you have some examples of how the legacy rails aren't really equipped to solve these problems and what you guys are trying to do to solve things like identity and trust for agents?
Yeah, I mean, the first issue is, how do I even know if I'm talking to an agent? How do I even know that it's the
Yeah.
agent I think it is? And we have that problem more or less solved in e-commerce because I go to Amazon.com, and there are certificates behind the scenes that my browser understands the root signer and all. I don't have to think about HTTPS, but that is the thing that makes me reasonably sure that I am talking to the real Amazon.com. But if I'm speaking to an agent, or I'm texting it, or I'm slacking it, or whatever the case may be, or however I'm interacting with this agent, how can I even be sure that it's operated by the company that I think it is? And then if I can be sure, how do I risk score it? How do I understand things like its reputation? Is it liable if things go sideways? If it escapes a particular policy, where's the liability or accountability lie? How can it be audited? What's the trail for figuring out, based on this agent's identity, here are the things that it did. And all those things don't exist yet in agent-to-agent communication, and we view transactions as kind of a subset of agent-to-agent communication. So the first thing is just kind of the equivalent of SSL and even DNS for agents. There have been some proposed solutions for some of these things, particularly when agents are paying for resources.
Mhm.
So accessing more traditional API, or accessing a data source, leveraging a de facto standard like MCP servers. And so there's beginning to, be some flows and common ways to approach it. But we're still early enough that there isn't an agent identity solution in the same way that there's an SSL certificate solution. If you and I go out and build an e-commerce website and sell frisbees or something, there's a path for us to go do that.
Yeah.
But if we want to do that and have a seller agent that interacts with buyer agents, there's still that security mechanism, which basically breaks down into three things. Should I talk to this thing? If I can talk to this thing, then what are the policies that are enforced as we have a communication? Could be spending budget limit, for instance, for payments. Could be, I want to spend up to $50 on it with at Starbucks, but you know, let me know, escalate to me as a human in the loop if it's higher than that, something like that. And then the third thing is just compliance, an audit trail. And so that's the sort of rudimentary level before we even get to more complicated payments flows that we need to address.
Yeah, I mean, it's interesting, right? The AI agents, I feel like a lot of them are either like subscription model based or usage pricing based, where I don't think we've seen like agents actually executing transactions as much as I thought we would, based mainly because like it's probably really difficult to do something like a shopping bot if you don't have a lot of this stuff built out, right?
Yeah, we see some early experiments there, but I would classify them, today as we're talking, I would classify them as mostly pilots. Some public pilots, glorified pilots. They're interesting experiments. I think where we're starting to see some emergent production use cases, though, are more on the B2B side, less on the retail commerce side. Certainly is retail commerce that's happening, but at scale, it seems to be that the B2B examples are emerging sooner rather than later. I mean, our belief is that ultimately this touches everything. It'll touch every domain. It's
Yeah.
almost easier, though, to see that in 5, 10, 15 years than it is to see really, really clearly, well, what does it touch first in the next 3 to 6 months? That's
Yeah.
always
I mean,
harder
it's
thing.
it's the same thing going back to crypto in the early days with
Totally.
Circle, right? I think it's a lot of, the technology is going to take off, but what is the avenue and what is the mechanism that it's going to use? I think was, based on your experience, pretty like, kind of throwing paint to the wall and seeing what sticks.
In Circle, we thought it would be payments. It turned out to be crypto capital markets was the first use case. And, Bitcoin as like digital gold, so to speak, is a valid use case. And also, other assets. And we thought those things would emerge in a mature way, but that they might follow something like payment flows. Remittance is an area where a lot of people talk about. It certainly seems like an obvious use case. it's even funny to call it a use case because there's no such thing as like cross-border emails or,
Right.
there's no remittance for most data on the internet, but there is for money. And so it seems like a case that we thought would be cracked sooner rather than later. We were wrong. But I think it is coming now, and there are companies that are working in that space, including ours, including, Circle. But um, large use cases, the stage at which they emerge is in some ways more difficult to speak to than the big vision of what will ultimately happen. Same was true with the web.
Mhm.
It was we were we were basically Jeremy and I were basically kids when we were building our first internet companies, and so we were around in those days. And it really was the case that at a point in time, it seemed like if you were in the U.S., there's more content on America Online than there was on the World Wide Web for most people.
Yeah.
But you could certainly see the web is going to change absolutely everything. It's going to change everyone's business models, and but to predict, oh, the thing that will stick first is a bookstore. That's a lot harder.
Yeah. Yeah, especially, yeah, there's that. It's funny because it seems like books are such a thing that you don't need the internet, don't need to. They can sort of the internet can sort of replace books. It feels like, which they have now with ebooks and stuff. But selling it back then was probably really key as well for Amazon. Um, but yeah, let's dive into the Agent Commerce Kit, the SDK that you guys have open sourced. I think simply, can you explain what that offers developers and uh, if I'm a fintech engineer, what can I do with your Agent Commerce Kit that I couldn't do before?
One of the things you can do is you can set up an identity for your agents that can prove that it is actually linked to you. That's important for a regulated financial institution, but just generally speaking for others, you can prove that this thing is under my control. Similar to if you were to get an SSL certificate in production, you'd have to go to DigiCert or one of these providers and prove with a CNAME entry or something for the tech audience to prove that you actually do control that web endpoint, among a bunch of other things that you need to do. And so this allows you to do something similar for agents. It allows you to prove that this agent's activities are met back to you. And so when anybody is interacting with that agent, say it's from us, say it's from Catena, when you're interacting with this agent, a single agent may be serving, millions of end user business endpoints or consumers, but they all need to be able to be sure that they're talking to the agent they think they are, and that ultimately, if something goes into an escalation path or errors or whatever it may be, in a regulated financial activity, what's the so-called neck to choke? Who is the money transmitter or the bank or the whatever on the other side of this? And we can verifiably say using cryptographic primitives, it's us, no matter how our agent is accessed. And so we're giving that same power to developers. It really answers both sides of the identity question, which is if I'm using an agent, if my agent's talking to an agent or I'm talking to an agent, how can I be sure it's an agent I actually want to talk to?
Yeah.
So you can do things like access listing. And that's important because most risk infrastructure and financial services is designed that, all bots are bad. No bot can access the system. You need to be KYC or KYB legal entity. What we actually need is the other way around. We need this assumption that the only thing that will be accessing your transaction service will be an AI actor. So, call it a bot or whatever. So how do you let in the ones you want to let in and give them permission to access certain things or spend a certain amount or whatever it is, while still preventing rogue AI actors from accessing your system. And so that piece alone is interesting. And then the flip side is if I'm one of the developers of these agents, how can I prove to somebody else without having to phone home to a central service? So it's not like an OAuth service where people don't have to ask us. You just use cryptographic primitives to prove that this agent is acting on my behalf. So it seems like a real simple concept, but that it starts with that. And then the second part of ACK is once you have that, what's just a standard pattern for requesting and receiving money? Whether it's stable coins or whether it's fiat or, credit card, virtual card, whatever it is, it's just a pattern that we can all agree on. Should be kind of a de facto standard for how money is requested and received and purchases or transactions proven to have existed. And so that's what we released first. It's just you think of it as um, open protocols, but really a pattern language, a set of patterns that we need as we're building our AI native financial institution. We need these things to exist. And
Yeah.
so we contributed them as open source and we'll, continue to iterate on those things with the community. And if there are better solutions to those things, so long as it satisfies the fundamental requirements, then we will look at, bringing those in as well. It's a full, ecosystem open source project, it's not a commercial product. And so
Yeah.
that's where we started.
And it makes sense, right? From a, I mean, you see a lot of AI projects that are open source, and the idea is to encourage development from the developer community and see. And I feel like for agents, you can't. It's a little bit of a payment network almost that you're trying to replicate, where you need the other side to also implement a lot of this technology in order for it to work to like its fullest potential, right?
Yes, and we really want it to exist in a way that doesn't have vendor lock-in, or in the case of things like stablecoins, issuer lock-in or chain lock-in. It really needs to span the ecosystem. It's really important, and and another analogy is like this is very much infrastructure. So another analogy would be if we invented EV cars, well, we need a network of charging stations now because the old rails are gas stations and they just no longer work with our EV cars. And so the ACK is all about kind of putting together that network to fuel the new way of transferring money with these AI actors. And just like the charging systems, it shouldn't be this only works with a Tesla or this only works with a Rivian or whatever it is. Like ideally, as somebody who is who's going to be driving an EV car, you don't have to think about that. It's just this common standard. And so analogies always break down, but that's another one that's not too far off the
It's
mark.
funny you mention this because I have a friend who I'm not gonna say the car manufacturer, but they bought a car recently. It's not a Rivian or a Tesla, and it's driving them crazy trying to find a charger. So very, very applicable comparison for sure.
It's the same thing with stables. If AI actors are managing stable coins, well, it can't just be, USDC over here or in Paxos, a version of the Paxos dollar over here, or Amazon dollar, or like name your,
Or
your new
PayPal
dollar stable or
stablecoin
PayPal.
now.
Um, yeah, I mean, ideally, as a business, a dollar is a dollar is a dollar. I just want it to be a dollar. I don't
Yeah.
want it to be, this one is worth 99.881, whatever, and so that's incompatible with this other. Just should just be a dollar.
And
And
in theory, right, the agent can, send a transaction across different chains to make that a
yes.
bit more compatible, right?
Yeah, and in fact, I mean, we've been talking about agents and stables, but the reality is in these workflows, there are multiple AI actors working together, and so it's multiple LLMs, multiple kinds of memory, constructs, multiple output evaluators, all these things working together. And the same thing on the stables is actually multiple stables. I mean, we will work with any that can get now the U.S. government stamp of approval that we'll be able to to work with. And there is an interoperability question there right now, because there are markets for different dollar stablecoins that
There's
are
That's a
not,
good
you know
segue into one of my later questions, but I'll ask it now. How do you see the stablecoin ecosystem playing out? It seems like you think that it's going to be pretty fragmented, and there are going to be a bunch of issuers. How do you? I mean, you see PayPal. You mentioned Paxos. There's been a lot of research and exploration around a central bank digital currency in a lot of countries as well. Would love to hear your perspective on all those things.
Yeah, so I think the one of the great things about the Genius Act is it does say what a payment stablecoin in the US can be, and so it defines a, pretty clear regulatory path for that. It does not define things related to interoperability. So if you have multiple issuers, it's still the case that it's not as bad as the days when there was bank money, but it did used to be the case if you got $100 at Wells Fargo and then you went to Bank of America. Well, Bank of America dollars are not the same as Wells Fargo dollars. We have a little bit of that now with US dollar stable coins, but it's a solvable problem. And it's a lot easier to solve in technology than it was when we had those issues with bank
With
money.
like
So
manual paperwork and ledgers.
yeah, exactly. And you can trust in cryptography to handle to handle the bridging between different issuers. And so, but so that is, that is, that the bridging across them is a thing. I don't think that there will be thousands, or even necessarily hundreds of these issuers, but there will be several. And then, one of the other things about the Genius Act is that it's not possible to return, some of the underlying interest to customers. Now there may be ways to work with that, with different kinds of programs. I'm not a lawyer. I have no idea about, I've heard people float things like loyalty programs and rewards. I think there'll be a lot of experimentation. That's where I come out on it. And it'll be experimentation that is built on top of clear regulatory guidance for, who the regulator is and what they require, and very specific guidance on underlying reserve management, which is really important because, you don't want to have to worry about how liquid are these dollars. Is there, in an event where
Yeah,
there's
it sort of defeats
like
the
a bank run
point
or
of
something.
stablecoins, right? Because like crypto, you mentioned the volatility is what really prevents it from being a payment mechanism. If you're worried about the liquidity, then that's another aspect that, you know, I think is probably more crypto, makes it more crypto than stablecoins, right?
Yeah, it's a mix, and certainly as we're deciding which stable or AI actors really are deciding which stable coins even to use to represent a dollar, we look across several, and one of the ways we make that decision is based on liquidity. We look at other things as well, and liquidity varies across different particular kinds of use cases, and in some cases even jurisdictions, and but yeah, it's an important factor, and will continue to be. Um, so, but to get back to your question with stablecoins, I think the most interesting thing is there will be some really interesting use cases that are the more obvious ones that will suddenly happen at scale. Like we talked about cross-border payments, bank-to-bank flows, certain global corridor, transactions. Super interesting. But then even more interesting are brand new kinds of products that simply can't exist because the old system is too inefficient. It's too expensive to do certain things like negotiate, real-time dynamic microtransactions. That's something we've been talking about for 20 years.
Yeah.
And now all of a sudden it becomes very possible because the speed and the economic efficiencies are there. Similar to what we were talking about with the web, it was kind of impossible to predict all the things that people were going to do on the web. You can see that it was going to touch everything, but it was hard to see all the amazing things that would be built on it. Same is true with these new financial rails. It's going to touch everything. It's going to change some existing models and make them much more efficient. Make every the global economy will become much more inclusive. People will be able to tap into credit markets like they've never been able to do before, spin up businesses. Um, but it will also unlock brand new products, the likes of which have not even been envisioned yet, and that's really exciting.
Yeah. Yeah, absolutely. So speaking of which, I think this is another good segue into you talked a lot about being in a stablecoin financial institution, a regulated financial institution. I think we've talked a lot about how stablecoins can affect the payment systems, but how do you sort of see, like, how do you sort of see stablecoins affecting the banking industry? Obviously, there's so many different things like cards, credit cards you mentioned, checking accounts, deposits. So, how do you think it'll be affected, and what are you guys thinking about at Catena Labs?
Yeah. I think one of the things that is interesting is for a lot of these companies, banks, payment service providers, the card networks, and even service providers on these networks, is that they're increasingly automating elements of the flow with AI actors in place. And so it's this combination of interest in figuring out how do they leverage the efficiencies of stablecoins, which are it's really related to speed and economics, for globally transmitting dollars in milliseconds around the world. In some cases, very very low fee, so not 2.9%, but like 2 to 3 bips or something.
Yeah.
Like it's almost free. And then how do they do that in systems that are becoming automated in ways that include AI actors, and include them in many ways, from things like risk scoring, compliance functions. Obviously, still with humans in the loop. This is not a story about AI replacing humans, but augmenting human capabilities and multiplying their capabilities. But also, AI actors for things like effects, managing effects markets effectively, not just negotiating contracts, but closing them, treasury management capabilities, all these sorts of things. And it's really both, it's the stablecoin side and the AI actor side moving, not necessarily in lockstep, but all making significant progress at the same time. On the AI side, the thing that's tricky to sort of hold in your head at the same time is two, like, very conflicting realities. The one reality is that, the trust barrier is a really high barrier to clear with AI actors, and when the anecdotal evidence that people have from interacting with, sort of pick your favorite your model, is that it hallucinates like crazy, and it can't give me a good answer for, how to make a chocolate cake correctly. How am I ever gonna trust it with money? And that's sort of where we are today, within a lot of people's experiences, um, with the fact that all the biggest, companies, financial institutions, inclusive, are all in on this. And this is the future. It's not always clear exactly how we get up that mountain, but there is a path that we will cut to get up that mountain and course correct with another path as needed. And so Um, so yeah, I think it's really these twin demand curves on the AI actor side, offering just unparalleled new efficiencies and boosting productivity. But how do you do that safely, and how do you clear the trust hurdle? And also this surge of interest in digital dollars or stable coins and the economic and settlement speed realities they bring. But how do you manage that efficiently, and how do you match that to your infrastructure if you're a bank, including your compliance and risk processes, as infrastructure. And so those are the things to navigate.
Yeah, I mean, something from my experience, I think there's a lot of startups focused on the fraud compliance AI workflows, and working in an institution, you sort of realize that like a lot of these systems live in silos, so there's not really any uh, cross connectivity between them, and I think that creates a lot of log jams too, where like a lot of these AI agent workflows is really just like picking data from one side and applying it to another process, right?
Yeah. Yeah, and I think where we are with agent development, I mean, we've gotten quite good at tuning AI workflows. I think where we are with agent development is that Uh, a lot of it is siloed in the sense that the approach that people take to developing a set of AI actors, even if it certainly will use multiple kinds of models, and sort of be cross vendor, but still mechanisms for executing agent communication tend to be a little siloed, either defined by a framework or by a particular vendor that offers a platform for building agents or something. And it is a little bit like working with a bunch of online services and not yet really the internet of agents, because there's no way to really discover agents effectively, and in a way that is outside of those frameworks yet. I think that that will be solved very, very quickly.
Yeah.
And there's just so much. I've been building software a long time, been building companies a long time. I've never seen anything do as quickly as this. And it's AI accelerated change now, so it's just, it's changing and
Yeah, with
growing
Cloud Code,
so
you could have,
quickly.
like, 5 sub-agent developers working on the same code base at the same time.
Yeah, of course, that brings other, new, security vectors or issues, but people are adapting to these new processes, and, it's one of the reasons that we decided we needed to build an AI native FI rather than just sort of tack AI workflows on, is that, when we look at moving money, but also new kind of risk vectors and how we would manage all the internals, of operating something like, a global, at least in concept bank, um, then it becomes difficult to take the archaic existing systems and then add AI on effectively and get that AI to 99.9% reliability. Getting to like 60% reliability in these is like magically easy, just almost
Yeah.
happens out of
It
the
just that
box.
last chunk is really difficult, especially when
Almost
you're working.
impossible.
Yeah, when
Yeah.
you're working with, like, brittle systems that, like, are really resistant to a lot of, like, external technology changes, right?
That's exactly right. Yeah, that's exactly right, and we found that, in tuning the workflows, if we can develop the workflows, effectively say for a customer support use case, like a particular company's customer support, call center or something like that. Well, the process to make that really, really good has a lot of similarities to how we would develop, say, a compliance agents, but the specifics are completely different.
Yeah.
How we think about midterm memory, for instance, and certain data context injections and subject matter expert human alignment, all that sort of the data science piece of it, the process has a lot of similarities, but the specific tactics that are taken to get to the 99.9% reliability stage are pretty different. And so it's a new way of working with machines. Yeah.
No, this is great. Thank you so much, Sean, for, taking the time to chat today. I've definitely learned a lot. I think our audience will as well. Yeah, this was great. Thanks again.
Yeah, of course. It was a lot of fun. Thanks.